Hey, what's up everybody? Welcome back to the channel. So today we're going to talk about how to invest when the market is falling like we've been seeing for the last week. Alright guys, so if you're new to this channel, feel free to like, subscribe, stick around. On this channel we talk about money, like to talk about investing, like to talk about just using wisdom so that way you can succeed no matter wherever you are. So today's video was actually inspired by someone who made a comment on my TikTok. Yes, I have a TikTok. And basically what he was asking was, should we maybe just wait, or try to find a different time to invest, because the video that I put up was about more so investing consistently. Now there's a lot of misconceptions, there's a lot of different strategies, a lot of different thoughts that go into this, because some people think you should invest consistently, some people think you should invest when the market's down, some people just try to time the market, all these different things. So you hear about investing long term, you hear about investing short term, you hear about trading, all that during this time, but there are some different caveats. And what I don't think that a lot of people are understanding when it concerns investing when the market is falling is exactly, what should you be doing and what should you be investing in. So I'm going to give some examples as far as what I do that may be able to help you. Now, if you just started investing, this really may not apply to you, because right now you're still trying to learn. You may just have purchased one stock, and really what you want to do is just kind of be consistent over that, but taking this time to learn. So I actually have different portfolios that I invest, and I don't invest in them the same way. So for example, for long-term investing, like I have my portfolio, which is M1 Finance. I also have Charles Schwab. Now, but let's say, for example, with my M1 Finance portfolio, all I do is simply just have a consistent regimen of investing, period. The reason is because that portfolio is made up of like 90% dividend stocks and conservative growth stocks, meaning, stocks that are pretty much they're standing the test of time, they're growing, and it's easy to invest in, like it's going to be around, so it's simple. And because most of those companies have good dividends, I am constantly receiving dividends, so my money grows pretty good. And within that portfolio, some of my investments are up 800% and 900%, all because I've just been consistent. So I have one set of portfolios that I just simply invest in, period, up, down, regardless, because the only thing that's in that portfolio are things that are going to be around, things that are dividend yielding, and things that are standing the test of time. That's it. So with that portfolio, I am investing, period. Like I said, up, down, and that's how you would want to invest. When you have a portfolio like that, you want to be consistent over a long period of time and just continue to invest, because see, that money is going to continue to grow. You're going to get a lot of dividends. That dividends are going to buy back more stock, and that portfolio is going to continue to grow, and it's going to outgrow inflation by a ton. Now, I do have some other portfolios that I don't invest in as consistent because they're more of short-term investments. So let's say, for example, I have a SoFi account and I actually have a Webull account. And within those accounts, I typically invest in things that are, more so short term. So what does short term mean? Short term means I'm either trading in it, or it's something that I find that's maybe interesting and I think they may do very good for a short period of time, or I don't really have the long, period of time interest in it. So basically it may be something where I have some companies that are, they're not companies I want to be invested in long term. But I know that there's a possibility that there's going to be like a quick run up, and I'm going to make some money from it, and I can take those profits. Or maybe it's something that I just see maybe doing good for a few days or something, or however I choose to trade, because with trading there's are things like options, etc. But that's more of a short-term investment portfolios that I have with Webull and with SoFi. Well, why do I have Webull and SoFi? Well, I love Webull, and the thing with SoFi is you can actually do fractional investing. So sometimes I may see a short-term play that I want to get in and maybe get out, maybe the next week, or maybe it's 3 or 4 months from now, and I might just invest a whole dollar amount instead of being concerned about the shares. So now in that portfolio, am I investing consistently? The answer is absolutely not, because that is not the portfolio where it's the long-term investments. And with those short terms, you do have to watch a lot of metrics and have to be careful, watch the news, because anything can change with those. Now, does it mean that those stocks are like short-term stocks? No, that means that they're my short-term stocks, because some of those stocks in those portfolios, some people might be, comfortable with investing in it long-term, and that may be a long-term investment for them. But for me, those that I have those that are in that portfolio, they're typically just short-term investments, meaning I have no ties to keeping it for years and years and years at all. So with that, I might be in and out of stocks from time to time. So when the markets have been absolutely crazy and going up the way it's been in my short-term portfolio, I wasn't buying as much as I was in my long-term portfolio. Now, this is how I keep things separated, and this is how I do my investments. This is me. Now, you can choose to do things how you feel free to, and you might not, choose to have multiple accounts like I do, but that works great for me. But in a downturn like this, where you see things coming down, it is definitely what we consider a discount. Things are on sale, right? So the example is, just imagine whatever your favorite, whatever it is, right? And you want it, and you've always been looking to buy it, and the price has been like, let's say $500. And then all of a sudden the price goes down to $250. You're more inclined to buy then because you're like, oh, this is still a good product, but now it's just at a cheaper price. This is what I just said, a good product, but at a cheaper price. It's one thing if the product becomes cheaper because it's not a good product. But when it is a good product and it's at a cheaper price, it makes more sense to buy. So that's why you want to be consistent. Now, if it's a bad product and the price goes down, then maybe you might want to avoid it. That's probably not what you want to be putting your money in, because it's a bad product and the price is affected by the fact that it's poor quality. Get it? So if a company ain't doing well because it's just not doing well, then there's no need to put money in. So then in a market where things are falling, it's going to get crushed even more. So let's say, for example, the airlines. When the airline industry started going down, a lot of people had so much stuff to say about you should or you shouldn't invest in the airline industry. Well, here's the thing. Just because the airline industry has, stopped and things are not necessarily moving and flying as much, does that mean that that would actually go away? So what a lot of people have done, or people that are a little bit more seasoned investors or even traders, what they've done is when they've seen those airline stocks, especially companies like Boeing, go all the way down, they hopped on it. The reason is because it's not going anywhere. It's just a damaged stock right now. The company is still the company. The only reason why the stock is going down like that is because we're in a pandemic and pretty much nobody was flying, no planes were moving, etc. Will we see the airline industry go out of business? It's probably impossible, because we need that to travel. We need the planes to travel. So then those companies start to go up, and a lot of people decide to say, hey, let me take my profit. Some people may have been investing in long term and they're still holding those stocks, and they're just constantly adding to it. So you have to look at the category and see where you are, who you are, and where do you fit into that scenario. Let's say, for example, if you're someone that's a lot older, like if you're in your 50s and your 60s, and you're seeing a fluctuation between your money, hopefully you have adjusted your portfolio through time. Because as you get older, you want to adjust your portfolio a little bit, or maybe a lot, because what happens is when you're investing in things that may be a little bit more riskier when you're like younger or whatever, doesn't mean you have to, but that's just kind of like the trend. Like, you can take more risk with your money. But when you get older, you're definitely investing in things that are more short shots, more conservative, because you need that money to be around. You don't need to see your money going way up and way down. You just need to see your money going up for the most part. So you're probably investing in more things that are more conservative and things that are bringing dividends. So those things are pretty simple and easy to invest in. But if you're older and your portfolio is highly volatile, highly risky, then you're definitely putting your money at risk of not being, because you don't really know how long a downturn can be or a recession could last. But hopefully this little tip has helped you kind of take a look into like the differences in investing. And I'm just sharing you how I do mine. I have long-term investing portfolios, and then I have short-term investing portfolios. I don't mix the two. So during this time, I'm doing being consistent in long term. So in my short term, I'm looking for something totally different that doesn't require consistency. Now, if you're interested in any of these companies I mentioned, like M1 Finance or SoFi or Webull, I'll provide some links in the description below that you can go and you can check them out. You can also get some free stock and even maybe some free cash for just signing up. So anyways, guys, hope this has been helpful. See you in the next video. You guys have a great one. Be blessed. Peace.